While the world watches the headlines coming out of the Middle East with bated breath, the financial markets are sending a clear, loud signal. For centuries, in times of chaos, one asset has stood the test of time. It's not Bitcoin, it's not the S&P 500, it's gold. Today, as the shadow of a direct war between Iran and Israel looms, we are witnessing a massive shift in global capital. But why does a regional conflict thousands of miles away dictate the price of a yellow metal in New York or London? Today, we're going deep. We aren't just looking at the news. We are looking at the mechanics of the safe haven trade. First, let's look at the map. Iran controls the Strait of Hormuz. Through this narrow passage, nearly 1/5 of the world's daily oil consumption passes. If this conflict escalates, the threat to global energy is immediate. But how does this affect gold? It's simple. Inflation. When oil prices spike, the cost of everything, from shipping to manufacturing, skyrockets. Historically, when oil crosses the $100 per barrel mark due to conflict, gold follows closely behind as an inflation hedge. In 1973, during the Arab-Israeli War and the subsequent oil embargo, gold prices didn't just rise, they quadrupled over the following years. We are seeing the same inflationary ghost return today. Here is what most casual investors miss. While you might be buying or selling small amounts, central banks are moving mountains. Since 2022, nations like China, India, and Turkey have been buying gold at record levels. But look at the Middle East. Countries like Saudi Arabia and Qatar are quietly diversifying their reserves. In a war scenario, the US often uses the dollar as a weapon through sanctions. Seeing this, other nations realize that gold is the only asset that no government can freeze or cancel. This is called de-dollarization. The Iran-Israel conflict is acting as a catalyst, forcing nations to dump US treasuries and hoard gold bars. This massive institutional demand creates a floor for gold prices that isn't going away anytime soon. Let's talk about the fear index. In finance, we call it the VIX. When missiles fly, the VIX spikes, and investors enter what we call a flight to quality. This means they sell risk assets like tech stocks and cryptocurrencies and move into hard assets. Why? Because gold has zero counterparty risk. If a bank fails or a government collapses, your gold bar is still a gold bar. During the 1979 Iranian Revolution, gold prices rose by over 120% in a single year. The psychology is simple. People don't want to be smart during a war, they want to be safe. We are seeing that transition happen in real time as individual US investors are now stacking physical gold at levels we haven't seen since the 2008 financial crisis. Now, let's look at the charts. If you look at the 10-year trend, gold has been forming what traders call a massive cup and handle pattern. This is a bullish indicator. Most Wall Street analysts from Goldman Sachs to Bank of America have already revised their targets. With the added pressure of a Middle Eastern war, many are now forecasting gold to hit $3,000 per ounce by early 2025. We have to consider the risk premium. Usually, gold trades based on interest rates. But lately, gold has been rising even when interest rates stay high. This is wartime pricing. It means the market is no longer looking at the Fed, it's looking at the geopolitical battlefield. So, what is the takeaway for the average investor? We aren't here to fearmonger, but to prepare. History shows that those who wait for the peak of the conflict to buy are usually the ones who pay the highest price. Gold isn't just a metal, it's a form of financial insurance. As the tensions between Israel and Iran continue to evolve, expect volatility. But remember, while currencies can be printed and digital assets can be hacked, gold remains the ultimate last man standing. If you're watching from the US, now is the time to audit your portfolio and ensure you have enough insurance for the storm ahead. Closing, if you want to stay updated on how this conflict impacts your wallet, make sure to like this video and subscribe. We'll be tracking every move in the gold and oil markets. Stay safe, stay informed.